Good evening, folks. Welcome to TopGunStockTrading.com. This video is for Tuesday, February 4th, 2014. All right, folks, got a bounce day today, like we talked about yesterday, that we were expecting. Just like we talked about, I got the SSO yesterday at 91.21, just there at the close to the market close. And you can say I was expecting a bounce today, and frankly, I'm expecting a bounce for another couple days. But I can tell you, this market is on thin ice, the way I see it, and very skittish, and every little negative news now will be seen as the sky is falling. It's a big change in sentiment, big change in attitude, if you will, or market sentiment, market emotion. From what we've seen in the past, whereas in the past every bit of bad news was good news, and every bit of good news was good news. Because bad news came, and that means the Fed's going to keep printing money. Good news came, and that means, well, heck, the market is doing, or the economy's doing well, and the Fed's printing money, so that's doubly good. So that's good news. And like I said, if we had bad economic news, that was assurance that the Fed was going to continue to print the money, and all was well, and we're all the markets is drinking the punch there as the musical chairs continue, the music continues. But now that the Fed has signaled that they are going to cut their bond purchases. The first time they did it last month, the market was like, okay, Roger that. We'll be careful, but as the market, as the news or the indications, the numbers continue to flow out, the Fed decided to continue their decrease in bond purchases, and I don't think the market believed the Fed when they said they're going to decrease it by 10 billion a month. This past time was assurance that hey, the Fed is on track, and they're going to continue to do. They're going to telegraph what they're doing, and they're going to say what they're going to do what they say. And now the market is just digesting that information or that news that indeed the Fed will continue to decrease their bond purchases. So that's why the market's going down. It's not because of China. It's not because of emerging market currencies. It's not because of Argentina. Look, we all know Argentina is going to default. They've done it I don't know how many times since they came into existence. They build up a big debt, and then they write it off, and all the investors and all their bondholders get gypped, and they do it again. 150 years later, they do the same thing. Everyone's forgotten, and they do the same thing. So Argentina continuously does this, and that's what most likely they'll be doing that again, is defaulting on all their debt, and it'll be restart the music there for Argentina. All right, so let's take a look at exactly what went on today, and what I think is going to happen with this market here. So what we have here is the market didn't get a very good bounce. It did bounce a point, but considering the 4-point down move, or the 40-point down move on the S&P, 1.2 points on the spiders here is not all that much. As you can see, the angle that comes in yesterday, a pretty steep angle into that support level, and we kind of got a dead count bounce, if you will. So the way I see this is basically down move followed by upwards consolidation. What's that going to produce? You've all seen me draw it, and heard me say it. It's going to be a bigger down move. So what am I expecting? I'm expecting a continued float up into the end of the week. We got the ADP jobs number coming out tomorrow. I don't know how serious the market's going to take it, but like I said, any news, any bad news, the market's going to take it as the sky is falling. So that's why I say this market is definitely on thin ice. What am I looking for tomorrow? If we can get to a higher high tomorrow and a higher close, if we can close above today's high of 175.84, so if we can close 50 cents higher, I think this market goes up into this range up here, up into the 178.75. We'll call it 178.50 is where anywhere between 178.50 and 177.32. That range there is where I think the market goes if we can close tomorrow above today's high. And the reason why I say that is that's certainly a positive indication to the market. Anytime you get a higher high and you close at a high, at the previous day's high. That marks a trend, and now the little guy might, the average investor might feel that he there might be he better get in before the bounce the bounce train leaves without him. Like every other bounce that has happened in this market, or every other dip that has happened in this market in the past 2 years, it's been bought up and the market has bounced higher. So if you look back over the last 2 years, and now I think I got 3 years on this thing. We'll go to the weekly chart. Every dip has been bought up and you got a higher high. You drop down 2012 and 2012, boom, and that was the epic run there we've had all last year was all the way up. So we had one dip last year during June time frame, smaller dip. Again, it's been bought. Every dip has been bought in this market. So that's what we're looking for. The average investor doesn't want to miss that train. So we get 2 up days in a row. He might feel that all is not that bad. He might start to buy into this market and create that higher high, if you will, or a continued upside. Make no means about it. This market is cooked. I'm just saying it's going to go down or it's going to go up for a couple more days. Hopefully, we'll get a couple days out of it, bounce up into this range like we talked about. 178.50, I think, is probably going to be near the top of that the next bounce before we start selling. So that's what we're going to look to do. We're going to look to play this bounce. I did buy the SSO yesterday, and what I'd like to do is give the other stocks some time to build their pattern as well before I can get before I start another short. So what do we have here in Amazon? Amazon has had a pretty big sell-off here. So it came right into my my support here, and now we're looking to get that pattern there. Again, a couple more days worth of pattern. We get a level in there. I think the 360 level is looks good for Amazon for a short, but again, we still need a pattern and a time factor there. So we have the pattern, the big down move. We need a time. We have the pattern. We need a time and a price. So that's the three-dimensional trading system with pattern, time, and price, all factors coming together. So I'm liking the 360 level. If I can just get that time factor to work into it, the pattern's already there. It's the basis of the pattern's already there. So we just need some more days of sideways to upwards consolidation for Amazon, and then we can get a short off on Amazon. Likewise, I was looking at IBB today, 258, up 258. Again, this is another classic. A lot of charts are looking like this, to be honest with you. Big down moves just because of the couple days worth of down moves we had yesterday and then from Friday as well. So down move, again, sideways consolidation. Again, this is another one that came right in at 238.77 where we covered last time. It's right back into that level. Today it bounced a little bit, 258, but I'm looking for again, a slight upwards consolidation before we sell this thing off. We go short on the IBB. That's the biotech sector. Taking a look at Herbalife. Herbalife's come back a little bit, up a buck. Down $1.75. Again, this pattern is forming right here. Looks a lot like the pattern that just got done that produced the big down move. So I'd be real careful with Herbalife here. You're in. You have the pattern. You got the time factor right there. So and you're into some resistance with these moving averages. So I would say about $73 is probably a nice short level on Herbalife if it can get there, if it can get through this 20. I see the 20 as a pretty good resistance. It hasn't been there in a couple of weeks, so I would say that would be minor resistance. And it had basically in spirit of touch today before it pulled back there. 71.18 was the high. Basically 20 moving average of 71.67. So we call that an in spirit of before it pulls back there. And that's what it did today, pulled back $3. So this might be on the downward train as it is already, but we could have missed that. May have already missed that short there. Taking a look at Apple. Apple was strong yesterday in the pretty down market, ferociously down market. Today is up $7.26. So it came into my support level. I didn't see that as a high probability bounce range, 496.97, but it has bounced the last couple days. So I didn't play that off the $500 level, even number. I didn't play it. I was looking a little lower for it to come in. Hey, this can go up to. I'm looking at 516.27 as the first support resistance. But again, I don't have very much to go off of. All I have there is a price level. I don't have a pattern or a time factor there. So nothing to play here. Just let Apple do its thing and see if it can't make a pattern to either go long or go short. If we can get a sideways consolidation here, in spirit of bullish pattern, we might be able to go long on Apple, but we'll see. Again, the Apple's probably going to go with the rest of the market, or at least its moves will be mooted if the S&P has another big down day. All right, let's get back on track with oil. Oil had a modest day today, 22 cents. Nothing to write home about. Still has that sideways consolidation, basically consolidating right below this resistance level that we talked about. That was going to be a short, but never got up that high, 35.33. Never got up that high, stopped short. Now it's consolidating below, so we're that level's off the table, and now we're going to look higher. So I'm looking at a Pierce of 36.04, and again, I'll play that via the SCO, or the 2 times ETF of the oil, and I'll just type it in there, as you can see, so you can see it here. Get a visual on the SCO. Again, I don't go by these 2-time ETFs for entry levels. I go by the 1-time ETF for my entry level and just do a little bit of calculation based on 2 times movement to get my my entry price for that. Moving on to gold. Gold had a basically it's down 33 cents. No big move on gold today either. Still has that upwards move with some sideways consolidation there. I don't see anything right here as of yet. You can see this sideways consolidation off this up move here. So basically you got a flag pattern building there, or in spirit of flag pattern. The pattern is too sloppy and choppy for me to play, so I'm gonna wait for something more crisper to form before I go long gold. Again, I think gold 2014 is going to be a bullish year for gold, so we'll wait patiently to get our entry price on gold. Today we stopped out a target. This is a tough one. We confirmed below the 56, I believe 23 level today, so we stopped out there at the close. Not much you can do. The market, big downdraft in the market. Target just kept having sellers. So tip your cap to target and stop yourself out and move aside. That happens to the best of us. So there's nothing you can do. You can't have all winners. So I tip my cap to target. I step aside and move on to the next trade here. FXC had a up 16 cents. So this is got some bullish. If we can get some more sideways consolidation here, we got an up move with sideways consolidation in spirit of bull flag there. So that's looking good. If we can get that consolidation there to press through that, I see that 20 moving average as minor resistance. What's more resistance is this red bar high here, 90.66. So if we can build up some pressure underneath to punch through that 90.66, I think we can go all the way up to $92 and some change there. Basically 91.73. Basically this minor pivot here is where I think we'll probably go if we can get through this red bar high, and there might be some resistance here at the 20, but that'll be a minor resistance. Let's see, what else do we have? Oops, sorry about that. That's FCX. We don't want that. Corn is on the Fox 3 alert. Pretty good day for corn, up 1.6%. That's good. We had this large up move, sideways consolidation seems to be a theme here. That's probably one of my favorite favoritor patterns, if you excuse my English there, especially when you get above these moving averages here on that pattern. It's only a matter of time before pressure builds up and you start higher on corn. So corn is we're in the money on corn, so we'll let that one play out. The first resistance coming in the first set, $32 is going to be some resistance there. So look for a minor pause there at 32 bucks before it goes higher. Again, you'll have some more resistance here at this pivot as well at 32.87 and then 33.50. But we're looking for corn to get to 32.50 to $33 before we start taking profits, and I think that's what my what those we can look at it right here. As you can see, this is my this is Top Gun Stock Trading. Feel free to come on over and join for a free trial here. All you have to do is basically sign up. It's free, and you get the Fox 3 alerts. So I usually don't do this. It's basically showing the Fox 3 alerts out there. You can see we stopped out a Target today, as well as J.C. Penney was a couple days ago. And I'm looking for the corn. We're still short Bank of America. There's corn, 30.65. So first target $32, and the second target, yeah, 32.90. So almost $33 on corn there. BAC, Bank of America had I thought had a update today. Did it close out flat? It looks to be a closeout flat. I didn't have it. This is the first time I'm looking at Bank of America for the day. Again, I sold a bear call spread back here at about $17. I think on this day, right? Actually, near the end of the day here, $17. Actually, no, I didn't. I sold it right back here at just under $16. It's just under, excuse me, just under $17 is where I got that back on the 9th, or sold it. So it's a bear call spread. So it expires here in February, and we're looking to capture that decay and that cash out of that. Not a large trade for me, but hey, it's still a profitable trade that we'll be able to capture some money to offset the loss in Target there. All right, folks. Just to recap, my stance on the market: if we can get another up day tomorrow, closing at above these highs, I think this market goes all the way up to 178.50. If we can't get 2 up days in a row, we chop around here. I think this market, in either case, the market's on limited time. It's on borrowed time. What I'd like to see in the perfect world is this thing float up here into next week before it takes a big move down. That'll give us a chance to capitalize on some long positions and get an ease into some shorts here come next week. I don't know if it's going to give us that time because it is a very skittish market, and you should be skittish as well. So be very cautious. Make sure your stops are in your stocks to protect yourself because this market has another downdraft coming to it. And I believe panic is beginning to set into the markets. I think the markets are testing Janet Yellen, the new Fed that just took over February 1st. Well, actually, it's probably that Monday. Actually, it was February 1st, Saturday. She took over, so the market is testing her. Back when Bernanke had the Federal Reserve, he always had the right answer. He's always had the right timing. He had the right message. It's as if he had his own public affairs officer, or they had the right message at the right time to ease and soothe the markets. They also seem like they released this money into the markets to buy the markets, basically the invisible hand, to create this lift out of the markets. And if you can remember Bernanke, he had the markets back from '09 when we were down to doldrums to the bottom, and he brought it all the way back up. So he's basically created another Fed-induced bubble, and he gets out just in time, hands it off to Janet Yellen, and I guarantee you Janet Yellen will go down in history as responsible for this market crash. Guarantee it. Again, that's nothing to brag about. I don't envy her position right now because she's in a very tough position. She is historically a uber dove, if you will, uber printing, and I think it's ultimately the Fed's printing the money is going to be the downfall. It's basically another Fed-induced bubble, like we had the tech bubble back in 2000, the housing bubble. It's just from one bubble to the next with this Fed, and they need to get out of this cycle. So 2014 is going to be a bearish year. I think it could be down as much as 20 to 30% from the open on January 2nd to the close on December 31st, anywhere from 20 to 30%. So be careful with your money, and be careful this time in the near term, because this market has more downside. All right, folks, this is going to end this video right here. Until next time, we'll see you on the charts. Have a good night.